Holy hell, it is, what is it, Wednesday, 12/26, actually 27th, again, recording after midnight. And wow, have we had a volatile market, man. It's crazy. Before Christmas, market sold off hard, continuing that super downtrend. And then we had a huge rebound today on Wednesday. Massive, over 1,000 points on the Dow. Everything was up, most notably Apple, 7%. Just, I mean, you don't see these kinds of numbers often. It's crazy. I'm going to talk about the things I've done with the account so far and what I think of this little pop that we've had today on Wednesday and my outlook for the future. So, first of all, I did a lot of stuff. So, things I've done, I've taken a big loss on that switch trade. I've lost like probably a total of $400 on that trade. Very bad. Don't ever trade something you don't know. Um, Interesting things that are happening. I'm receiving a $133 dividend from the Russian ETF, which is really nice. 41 dividend from the emerging market ETF, which is really nice. I've done a lot of options sells and I've closed a couple positions. So I just recently sold the GDX. We're going to work on reverse order here. I purchased a put, Apple put, that I had sold, and I purchased it for $29, and I sold it for I think 169. So I took a nice 130 something dollar profit there. And you may ask, how, where did I get the money for this Apple put? Well, I decided to pull the trigger, my friends, and look what we have here. We have $26,000 of somebody else's money to play with. That's right. I've upgraded my gold account to now have $30,000 in margin, and I'm going to be paying a $125 fee per month, which equals out to about 5% annually. So it's like I'm pulling out a loan at 5% annually continuously. So the goal here is to make more than $125 using this borrowed money, and I have just made my first $125,000 this week in a matter of a couple of days with this Apple put. That's going to be the judge. The judge is going to be my option play with at least $30,000 to see if I can match that amount. All right, other things that we've done. I know it's big news. I'm just kind of glossing over it, but it's a pretty big move. Let's see. Other moves. I just bought a couple shares here and there, no big deal. I just wanted to average down my Spotify investment because my average is way too high, like 155 or something. So I bought a share at 106 to just kind of bring it down a bit. There's another Apple buy at 153. It's already at like 160 or something. Let's see what else happened here. I got called on to buy SIG. I'm sorry, to sell 300 shares of SIG or something like that. It's fine. I already took the profit on that. I told you that trade was dead. I also got assigned to buy the Russian market at 19.5, and of course this doesn't isn't part of that $133 dividend because I bought it too late. But that's fine. I want to own the Russian market. I'm long Russia, so this is going to be an interesting. Here's the Robinhood Gold detraction of funds. Um, I also rebought some calls that have sold on EXK because I think it's going to be going up through um, January 18th, and this is what I rebought it for. I pulled out about, I don't know, like $40 profit on this trade. I had sold calls against my EXK position and now I rebought it. So if it goes past 250, I can profit without having to sell. And that just cost me $25 to free up 500 shares, I believe, of EXK to profit on, because I think we're gonna get a silver pop in the beginning of next year. So I just averaged down some funds and stuff like that. Nothing too impressive. I sold. Well, this is the put sell that I had to trigger, and that's about it. I think we've caught up. Yeah, I sold some stuff. Yeah, we've pretty much caught up. Oh, I told you about this EXK sell here. Yeah. All right. Well, let's see what the account looks like now. So it's valued at 42,724, which is a lot better than it was yesterday. It was at almost $2,000 less at 41,000. It was, I think, even under 41,000 for a brief moment, which is kind of ludicrous. So it's still looking poor. It's got, I'm basically flat with this account now. Nothing to write home about. This, I think I probably would have made more money in just savings account than I would have by investing in Robinhood. But we got to look to the future and hopefully I've learned from some mistakes. And now that the amounts are bigger, I can make some moves and start really growing from this baseline here. So we'll see. So far, 2 years. Actually, this would be entertaining to see. Let's see that all time. It's pretty miserable. I mean, if I just stayed in the market, look, I'm up 1% all time. If I just stayed in the markets, I would have been up a lot more than that. But me trying to be money manager over here is learning, still learning, looking for that big payout. All right, so that's pretty ugly. Look at the 1 year performance, 2.8 down, which is better than the markets, and also my 3 year performance better than markets, but my all time is definitely not better. Um, my 3 month performance is down only 3%, and let's look at the S&P over the 3 months. A huge pop today. Is down 15% versus my down 3%. So I'm faring a lot better than the S&P. In fact, 5 times better than the S&P. But it's not positive, so nothing to celebrate. Still losing dollars. If somebody just had their money in the checking account, would have done better than me over the last 3 months or a year, and would be better off if they had it in a savings account over the entire course of my. Oh, all right, all right, all right. So this is the history. This is where we're at. This is reality. So what's going on from here? What I think about this rally today. Let's show it in the weekly chart. Huge, uh, huge rally. My account was up as much as the markets basically today, and which leaves me about even for the week. Okay, so I do think this is a counter trend rally, guys. All right, so like if you go to the S&P chart, usually in bear markets you have these violent corrections. All right, in big bear markets, this is the yearly chart of the S&P. In bear markets, you have these violent 1 day, 2 day, even a couple week corrections that eventually fizzle out. All right, and there's another wave of selling that usually comes in just when you think things are okay. So I do think this is one of those times. I'll be surprised if this was it. Um, it is a really massive up spike, but the thing is, it's so common for big bear markets. Like for example, in the 2008 crash, we had a couple days that were over 10%. This was just a 5-6% day. It wasn't even a 10% day. Although it's the biggest point rally in the Dow in history, it's only about half as big or even less than the biggest percentage gain days. We saw some in the Great Depression, and we saw some of these, in other bear markets throughout American stock market history. And so this might be just one of these days. And in fact, I would say the probability is very high that it's one of these days. If we pull out a Dow chart, I'm looking for Dow to drop all the way down to 18,000 before it has a meaningful rebound. I'm not looking for a huge crash a la, you know, 1929. I do think that bankers and government have a lot more power over the markets nowadays, and they're not going to let that happen. And even if it does happen, it's going to only last a few days before the market recovers all the way up because they will act. I can guarantee you, everybody's going to get into those rooms and they're going to act. All right, so the 18,000 somewhere around here. But this is the S&P, it's not the Dow, but you know what I mean. So if it drops, it might drop as much as double this, but that's about it. I'm not looking, I think 35% will be the max percent correction for this move here, which is really significant, but not as deep as, you know, people who are bearish would believe because if you come from the premise that this entire market is manufactured artificially by central banks pumping in liquidity and rate manipulation and all that, then you would be looking at a retracement all the way back down to the 2008 lows, which or even 11 lows, which is just not going to happen. No one's going to let the market go that far. And like I said, if it does, it's only going to be for a brief moment or a few moments, a few days at the most, and it's going to have a violent snapback because people, I mean, the government will just straight up buy the entire stock market. So much money will be printed um, that, I mean, nothing in the history of the world will equate what's going to happen. Just in order to avoid like civil unrest, although not a lot of people own stocks nowadays, but people will be out there like retirement funds will disappear, pension funds will disappear, like 401ks will disappear, people's portfolios will disappear. There's just going to be riots by rich people or former rich people. It's going to be people jumping off buildings a la 2008 style. I mean, it's going to be crazy. Okay, I don't know if people jumped off buildings there, but I know people suicided over their, entire life evaporating. So it's going to be crazy. So that's not going to happen. It's definitely not. 18,000 is the lowest target that I'm predicting here. So I am pretty neutral on the market. I think that overall, the next 10 years, we're going to see very little nominal gains and virtually zero real gains in the stock market, the US stock market. I'm looking abroad, I'm looking at emerging markets to make the real gains, substantial gains, and I'm looking at, you know, to profit short term from precious metals, short term meaning like 1 or 2 years, and then from uranium in the 2 to 5 years span, and maybe turn that over into some real estate and stuff like that. So that's my plan. We'll see how it plays out. This is the emerging market fund that I'm getting $41 dividend from. Um, it's got a pretty huge correction here. My average purchase price is higher than it says here. I mean, there's a reason for that, but we're not going to go into it. And I mean, I'm not hoping, but I'm anticipating a a snap up like this, another wave just like this, but just bigger. Um, once this bear market resolves itself fairly quickly, in my opinion. So I'm hoping to profit off of that as well. I'm gonna keep this fund for quite some time, perhaps a couple years, I'm guessing. So as far as silver and gold, EXK here was the only gainer in my silver miners and gold miners portfolio. They don't do well when the stock market does well. They've been kind of flat. That's a late, as of late. This trend is intact as of late. Um, the what was I talking about? Oh yeah, so the precious metals they've been kind of flat and very just ignoring the action in the markets really. But just a steady climb for gold. It's bumping into resistance now, so we're probably going to have a little bit of a downturn before it comes back up. But I'm expecting some kind of an explosive move from silver at least in the beginning of next year. Hopefully by January 18th, I have blown through my targets on EXK. It really needs to push up through 250. I'm guessing it will go all the way to $3 because the dynamic I talked about with silver in the markets before. We'll see if that plays out. It may be a delayed play out. It may have been a little bit of an anticipated play out, and it's just a very muted way to play this out. Like you can see how it's up over the last month, like 6.63%, but that's not really the type of gains that we see after bear markets from silver miners, especially high cost ones like these. Instead of 6%, I'm looking at like 60 to 260%. I mean, not 6%. What is this? So I'm hoping that this is just a smart money, like me, super smart traders right here, investing prior to this happening. So we'll see if I'm right about that. In the meantime, I'm going to be trying to pull off some money from trading Apple options. You can see this beautiful rise to $156 here from Apple today. It's pretty insane. You can see the weak action. Very interesting rebound. Very V-shaped like. Um, all right. Now, with all that out of the way, I do think it's counter-trend rally. I do think we have more downside to go, but it will stabilize eventually, and market will not have more than a 35% correction in is my thought. And I'm looking for a big silver rally from this point. Also, don't trade based on what you see here. Of course, like always, do your own research, consult with your advisors, and take care of your investments. All right. With that said, I think I'm done for today. That was a good one. All right, y'all. Peace out.